from the News Channel 8 studios, this is Washington Business Tonight with Rebecca Cooper.
Business owners beware. For the first time in more than 20 years, the IRS says it will study the way you classify workers. What does study mean? It means you may be about to get an audit. Independent contractors also want to pay attention. The IRS wants to make sure that companies aren't classifying workers as independent contractors to avoid employment taxes and benefits. Joining us now to explain what you need to know, Reston-based business and estate attorney Wayne Zell, host of the weekly radio program Blueprint for Wealth. Mr. Zell, thanks for coming in. This is an important thing in this city. There are so many independent contractors working in Washington, but the IRS says, hold up, there may be fewer independent contractors than businesses want to admit. You say there are 3 ways that IRS agents are trained to look at whether a business has a contractor and employee. Tell us broadly the 3 categories.
Sure, there's 3 broad categories. One is behavioral control. The second broad category is financial control, and the third one is the relationship among the parties.
And then that's divided into several different subcategories. But on behavioral control, you say it literally is how much do you control the behavior of that worker?
It's not only how much control you actually exercise, it's whether you have the right to control the worker. So let's say the individual is working for you and you have the right to give them instructions and tell them how to go about doing their job. Or you give them training, specific training, so that they can do their job only for that particular employer. Those are the key factors in evidencing that control exists.
But this doesn't make sense to me, because if you're hiring even an independent contractor, don't you have the ability to tell that contractor how to do their job?
Well,
seems a little gray to me.
The question is, how much control do you have the ability to exercise over the way the individual exercises their performance? Right? Well, what do they do?
Something like 20 different categories?
20 factors. The revenue ruling came out all the way back in the 1980s, but now they're finally enforcing it again. The last time they really engaged in this enforcement effort was in the mid-1980s. So the factors really focus on the way in which the individual does the job. So if the employer has the ability to control the way in which they do their job, or where they do it, or when they do it, those are key factors in basically establishing that the individual is not an employee, but in fact an independent contractor. Getting
away from the gray and into the more black and white, as I see it, you say there are some businesses that actually have what they call independent contractors, but that person only works in their office, only works for them, only has their job assignment. That seems pretty black and white. But given that employers may be doing this and not intending to break the law, what's your advice to them to get ahead of this audit?
Well, really it depends on the facts and circumstances. So each employer, I think, is advised, particularly in this climate of new IRS initiatives to go after the employers, to maybe conduct a pre-audit. Have their tax attorney
themselves.
Yeah. To have their tax attorney or their tax accountant come in and look at their facts and circumstances. Let's say you've got an employer with 10 individuals working for you overall, and 3 or 4 of them are independent contractors. That might be a signal that maybe they're not independent contractors, they might be employees. Or out of 100, 30 are being classified as independent contractors. This is beneficial to the employer because the employer doesn't have to pay all the employment taxes and pay for all the benefits and have them participate in the qualified retirement plans. But for the employee or for the individual who's the independent contractor, it may not be quite as beneficial, and they may want to be characterized as employees.
So what do you do if either you discover that you've been making a mistake all along, or if you kind of knew that you might be on a slippery slope? Do you fess up ahead of an audit to the IRS and say, hey, this is a mistake and we're going to recategorize? Do you pay back taxes? What do you do?
Back in 1978, Congress enacted some safe harbor relief called Section 530 relief that employers can take advantage of as long as they haven't been audited previously and they meet certain other criteria. If they take advantage of this pre-filing initiative with the IRS, then they can be excused from any back taxes or penalties or interest.
Really?
But going forward, they're promising to characterize these people as employees and not independent contractors. Short of that, there are other ways in which you can notify the IRS and get relief from the IRS and not be penalized, such as filing Form SS8 and other forms.
We've got to wrap, but you say, kids, don't try this at home. This is the time to really seek the advice of a professional.
Try to get a tax professional to help you out, and if you get audited, get the tax professional to represent you before the Internal Revenue Service.
All good advice. Thanks so much.
Thanks
for joining us.